The BigBear.ai stock price is currently trading at $3.72 during this Tuesday, April 28, 2026 intraday session, marking a steady upward nudge of 0.54% since the opening bell. While a sub 1% move might seem like background noise in the volatile world of small-cap AI, the underlying mechanics of this price action suggest a market that is holding its breath. We are seeing a tight tug-of-war between the $3.64 support level and the $3.81 intraday high, with volume beginning to percolate as institutional players look toward the upcoming May earnings call. What most investors are missing right now is not the price itself, but the massive structural shift in the company's DNA over the last few weeks. While the retail crowd is busy looking at old charts of Nvidia stock or Apple stock for a sense of direction, BigBear.ai has quietly completed a balance sheet cleanup that most analysts thought would take years. The reality is that this company has effectively deleted 90% of its debt in a single fiscal cycle. That is a staggering pivot for a company often labeled as a speculative play. If you were looking for a sign that the training wheels are coming off, the settlement of those 2029 notes early this year was it. This isn't just about survival anymore. It is about a concentrated effort to become the go-to provider for mission-ready AI in the defense and logistics sectors. The common narrative you'll hear on most investing sites is that BigBear.ai is just another Me Too AI company riding the coattails of giants like Palantir. The expectation is that they will continue to struggle with lumpy government contracts and high cash burn until they eventually run out of steam. However, the reality of their 10-year, $900 million Air Force contract suggests a very different outcome. This isn't a pilot program or a small research grant. It's a decade-long integration into the backbone of national security. When you look at the recent leadership hires, specifically Alex Thompson and Joanne Bjornson, you see a team being built for scale, not just for a quick flip. They are moving away from the startup mentality and into a phase of rigorous corporate maturity that usually precedes a significant re-rating of the stock price. When you spend time on a trading platform or use the Fidelity mobile app to track these movements, you start to see that institutional activity is shifting. We aren't just seeing speculative retail traders on the Robinhood app flipping shares for a quick lunch. We are seeing a consolidation of shares among those who understand the travel and trade vertical. The acquisition of CargoSeer and Ask Sage shows a company that is no longer content with just being a defense company. They are building a moat around autonomous cargo inspection and border security, sectors that are historically recession-proof and heavily reliant on the kind of predictive analytics BigBear.ai specializes in. If you are looking at online investing through the lens of a long-term individual brokerage account, you have to ask yourself if the market is correctly pricing the 17% projected revenue growth for 2026. The guidance of $135 million to $165 million feels conservative given their recent expansion into the UAE and the broader Middle East market. The expectation is a slow, steady grind, but the reality could be a massive surge in international revenue that catches the street completely off guard. Most people using the SoFi trading platform or interactive broker stock trading tools are still focused on the 38% revenue dip from late 2025. They see that as a sign of weakness, but if you look closer, that was almost entirely due to lower Army program volumes, which have historically been lumpy. The backlog is what matters now, and that backlog is looking increasingly healthy. To get a real sense of where the community stands on this, I want you to comment below with the specific price point you think BigBear.ai needs to cross before it becomes a must-buy for you. Is it $5, or are you waiting for it to clear the 52-week high of $9.39? Let's talk about the business model for a second, because it's the foundation for everything we're seeing in the stock price. BigBear.ai provides what they call mission-ready AI. In plain English, they take massive amounts of messy, unstructured data and turn it into something a general or a port manager can use to make a decision in real time. This isn't the kind of generative AI that writes poems or makes funny images. This is the kind of AI that predicts where a shipping container might be delayed or how a tactical situation might evolve on the ground. They operate in highly regulated environments where hallucinations aren't just a nuisance, they're a catastrophe. This niche is incredibly hard to break into, which is why their 10-year Air Force contract is such a big deal. It's a stamp of approval that very few companies in this space actually have. If you look at the competitors on investing sites or through your SoFi active investing account, you'll see names like C3AI and Palantir. While Palantir is the undisputed king of the space, BigBear.ai is positioning itself as the more agile, specialized alternative. They aren't trying to be everything to everyone. They are focusing on national security and travel and trade. By narrowing their focus, they are able to win contracts that might be too small for Palantir to care about, but are too complex for a standard tech company to handle. This niche-down strategy is starting to pay off, and the recent acquisitions are the proof. Ask Sage, for example, gives them a secure way to use large language models in classified environments, something that is in extremely high demand right now. Looking ahead, the next 6 to 12 months are going to be a masterclass in expectation versus reality. The expectation is that the May 5th earnings report will show a continuation of the losses we saw in 2025. However, the reality might be that the cost-cutting measures and debt reduction have already started to impact the bottom line more significantly than people realize. If they can show a path to being EBITDA positive, the narrative will flip overnight. We are currently seeing the stock trade at a forward price-to-sales ratio that is significantly lower than its peers. This valuation gap exists because the market is still punishing them for past performance. But as we know, the market is a forward-looking machine. The moment the risk of bankruptcy or further dilution is fully off the table, that valuation gap should close rapidly. For those using a Schwab Intelligent Portfolios or a SoFi Robo-Advisor, you might not see BigBear.ai in your mix because it's still considered a high-risk small cap. But for those who manage their own self-investing through a Fidelity brokerage or an Interactive Brokers account, this is where the real opportunity lies. You have to be able to see through the lumpy revenue and the historical losses to see the lean, mean, AI-driven machine that is emerging. The risks are still there, of course. Government spending can be fickle and the competitive landscape is only getting tougher. But with $462 million in cash and investments, BigBear.ai now has the war chest to fight those battles. They are no longer the underdog trying to find a seat at the table. They are starting to own the table. The trading volume today is telling a story of quiet accumulation. We aren't seeing the massive spikes that characterize a pump and dump, but rather a steady flow of capital into the stock at these levels. This suggests that the smart money is starting to build positions ahead of the May earnings. They are looking at the 8% return over the last month and the 17% projected growth and realizing that the downside is becoming increasingly limited while the upside remains massive. If you are using the Robinhood app to trade, you might be tempted to jump in and out, but the real gains in a company like this are made by those who can sit through the volatility and wait for the long-term contracts to bear fruit. To summarize the situation, we have a stock that is currently undervalued compared to its peers, a balance sheet that has been scrubbed clean of almost all debt, and a leadership team that is focused on high-margin, mission-critical sectors. The expectation is a slow recovery, but the reality is a company that is coiled like a spring. The May 5th earnings call will be the first real test of this new, leaner BigBear.ai. If they can demonstrate that the CargoSeer and AskSage acquisitions are already contributing to the top line and that their international expansion is gaining traction, the current price of $3.72 will look like a gift in hindsight. We've seen how Nvidia stock and Tesla stock have redefined their respective industries, and while BigBear.ai is much smaller, it is operating with the same kind of focus and intensity. Whether you are using Fidelity Wealth Management or just starting out with online investment help, the key is to look past the headlines and into the actual financial health of the company. BigBear.ai has done the hard work of fixing its foundation. Now it's time to see how high they can build the house. The contrast between what people think BigBear.ai is, a struggling AI startup, and what it has actually become, a well-capitalized, debt-free, government-partner tech firm, is the primary driver of the opportunity here. As we move toward the close of today's session, watch that $3.80 level closely. A close above that would be a very bullish signal heading into next week. This is a game of patience and a game of data. The expectations are low, which gives BigBear.ai the perfect environment to overdeliver. When the reality of their growth finally hits the mainstream investing sites, the window for these prices will likely be closed. Stay focused on the fundamentals, keep an eye on the institutional flow, and don't let the short-term noise distract you from the long-term structural changes that are happening right in front of us. This is the essence of smart investing, finding the gap between the market's perception and the company's reality, and BigBear.ai is currently offering one of the widest gaps in the AI sector today. Keep your trading platforms open and your eyes on the volume. The story of BigBear.ai is far from over, and the next chapter is about to be written in the form of a first-quarter earnings report that could change everything. Whether you're holding a few hundred shares in a Robinhood investments account or a major position in a Fidelity trading platform, the strategy remains the same. Trust the data, watch the debt, and keep a close eye on the contract wins. That is how you navigate the complexity of the modern stock market, and how you turn speculative ideas into a solid portfolio. The reality of BigBear.ai is finally catching up to the hype, and for those who are paying attention, the timing couldn't be better. Stay sharp, stay informed, and always look for the reality that the rest of the market is too busy to see. Disclaimer, this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.